Hi, everyone. My name is Risay Candelaria, and I want to welcome and to thank you for joining us today. I'm a current member of Impact Austin, and today I will be serving as the moderator for today's event. I'd like to start off by recognizing the sponsors for our session today, Schwab, Charitable, and Mariner Wealth Advisors. I'd like to thank you for your support of Impact Austin and, of course, in many of our events that we hold throughout this year. I'd also want to take a minute to introduce you to Impact Austin if you're not familiar with us. We do lots of good things here in this Austin community, such as, being founded since 2003 and having given over $7 million in grants over our history to over 68 organizations. As a collective giving organization here in Central Texas, philanthropy education is a key tenet of what we do. And so I'm excited to introduce our speakers today that are going to tell us more about investing, women's philanthropy, and how we can make a bigger impact in our community. First up is Mary Jovanovich from Schwab Charitable, who has more than 10 years of experience with Charles Schwab and Company. Mary is a senior relationship manager where her commitment to building successful relationships between advisors and clients is based on incorporating charitable planning into that wealth management. Thank you so much, Mary.
Thank you for having me. It's a real pleasure to be here. So what I'm going to talk about is gender lens giving and investing strategies. And I'm going to dive a little bit deeper into what Suzanne has just said and enable you to understand how do you take that information and potentially put it into action. So how are women making a difference? Well, just as Suzanne had discussed with us, American women are really seeing real progress when it comes to financial equality and empowerment despite that wage gap. Globally, as opposed to what Suzanne focused on with her statistic, is that women will own about $22 trillion by 2020, but globally, women's accumulated assets could reach $110 trillion by 2025, according to the Boston Consulting Group. So women are actually using that rise in economics power and influence to make a difference in the world in new, powerful ways, including investing in companies and supporting nonprofits that promote greater women's equality. So why is this happening? Well, first, women are more deliberate with their charitable giving strategy, with 78% creating an annual giving plan and/or budget compared to 72% of the men. And women enjoy collecting giving. As you've learned, Impact Austin alone has given $7 million to over 68 different organizations. And women are more likely to use impact investing to complement their charitable giving. And women tend to see giving as a means to articulate their values, which takes higher priority over performance in some cases. So 4 strategies to create a gender lens approach to investments and gifts. But before I start that, I think it's really important to go over the philanthropic learning curve, because for many of us on the call, we could be at different stages of our lives. We could be younger, we could be in our 30s, our 40s, 50s, or we could be, getting ready to retire. So there are different areas that you need to think about where you are on your philanthropic journey. First, you become a donor. And that could be donating, how your time, your talent, your treasure, your ties, or your testimonies. It doesn't always have to be about giving dollars. And next, you decide to get organized. And then you become a learner. That's probably why you're here today. And then you're going to become issue and results oriented. And your philanthropy starts to be leveraged. And that's what I'm going to do with these 4 strategies today, is help you leverage that results issue oriented concept that you're focusing on. And eventually what's going to happen is you're going to be able to align your vision, your passion, your interest with your philanthropy. So where do you start? Step 1. The first step, like Suzanne talked about with values-based investing, is identify your values. And some motivational values to consider could be traditional, it could be an opportunity, it could be loyalty, it could be justice, or it could be leadership. For me, my personal journey and my values are based on my childhood. One of the most impactful situations that happened to me personally, there are 2 that have driven my philanthropic mission to support women and girls' causes, is first when I was 8 years old and I was in the grocery store with my Aunt Sari. And my mom had asked me to help her buy the most affordable food at that time, because back then, when I was 8 years old, women would get their Social Security checks, and we would take her to the bank and we would cash it. We would pay the bills at the bank, and then we would go to the grocery store and buy the majority of her food for the month. And one of the things that my mom had me focus on is that she was on a limited budget and she really needed to take that money as far as she could. So I was learning math and I was trying to help my Aunt Sari pick the cheapest brand of food. And we were in the fruit aisle and she had picked up a can of peaches, Del Monte peaches, and I did the math and I realized that the generic brand was cheaper. And in this case, back then, generic brands weren't as pretty as they are now. They were a white can with black labeling that said peaches. And I put that in the cart and my aunt took it out and replaced it. It was in that moment when I was having the conversation with my aunt that she had to admit that she didn't know how to read. And so by her buying that can with just the word peach on it, she would not know what was in her cupboard. And that is why she had to buy the Del Monte. I didn't understand that as an 8-year-old. And so my mom had to explain to me that she didn't receive an education. Fast forward, I'm 18 years old, and I had the incredible experience of being a Rotary Exchange student. And for me, I went to Brazil not knowing the condition of Brazil or how people lived there. I was very fortunate. I was able to stay with a very wealthy family who had a maid. That maid was 12 years old. I have never in my life to this day ever seen another individual work as hard as that 12-year-old. So for me, I made the decision at that point in my life that women and girls needed to be my priority and what I needed to study in the future. So I would ask you to think about what's happened in your life and what you're passionate about. Next, you're going to start to align your philanthropy and investments once you decide what's important to you. So gender impact investing can mean many things. It could be investing in companies that are owned or led by women. It could be backing enterprises whose products or services improve women's lives. It could be investing in companies that commit to gender equality in their operations and culture, or you could be evaluating their suppliers and partners' performance on gender issues. But philanthropic giving alone is not sufficient to make the change many people want to see in this world, but it plays an essential role and also enables you to learn about both the systematic roots of problems and the nature of solutions. Investments offer the potential to use market forces to make change at scale, but may be limited by required returns or size. When combined with philanthropy and sustainable investments, it's going to help you increase your opportunity to drive positive social and environmental changes. And what do I mean by that? Well, when they're used in tandem, when you look at your philanthropic goals and your investments, so where you're giving your money to and where you're investing, when they're used in tandem, they can help achieve maximum impact. Even if you're not deploying both giving and sustainable investing to affect change, it helps to be mindful of how they work together. And for example, here is a possible scenario. Let's look at the grant side. First, you can see one area that you could potentially grant your money to would be Impact Austin. Another local charity could be Mother's Milk Bank Austin, the Refuge for DMST, or Life Works. That's where you could potentially give your money away. Now, maybe you're not ready to give your money away. Maybe you're in that accumulation stage in your life. So you really need to focus on the investment side and not the giving side. In this case, this is where you could potentially work with Mariner Wealth Advisors to get that guidance. What's really interesting is back in 2018, Impact Shares and the YWCA of Chicago launched the first of its kind ETF on the New York Stock Exchange. It allows investors to deploy capital in companies whose business practices align with gender equality. So Impact Shares like WOMN uses capital markets to further the YWCA's mission of eliminating racism and empowering women. The profits go back to YWCA in Chicago. Another thing you could do is you could look at a particular underlying investment. And so PAC Sustainable Allocation Fund, which is something that we offer at Schwab Charitable, again allows you to invest in an ESG strategy. So most people give because of altruistic reasons. They see a need and they want to help out. However, I'd like to suggest a new way of thinking about your giving and to consider it as part of your investment strategy. Just like your current investment strategy, there are key concepts to consider to maximize your overall impact. And first, it starts with the conversation. And that's where Suzanne can help in that area and other advisors. Because what they're going to do is they're going to actually help you understand the best giving vehicle to use as it relates to your philanthropy. What's the best asset to use? Cash typically isn't the best asset to give charity to. You might be holding on to an appreciated asset like Apple stock, or maybe you own a business, or maybe you have a piece of real estate. So understanding how you can utilize those assets could actually help you make your giving go further. Timing. Timing can mean everything. Back in 2017, when tax reform was passed, a lot of people took advantage of being able to give more money in 2017 than in 2018, because if you were in the top tax bracket of 39.6% and you gave $100,000 directly to a charity, you could claim a full fair market value, or excuse me, you could claim your charitable deduction at $39,600. Then they changed the tax bracket to 37% in 2018. Giving that same amount would have reflected $37,000. So as you can see, there's a big difference when it comes to those types of strategies. And then identifying tax benefits and implications. Again, that goes back to that tax bracket and updates to tax reform and also the CARES Act. So why do we talk about utilizing appreciated non-cash assets? I like to call this my Jack and Jill example. Let's pretend, for example, that we all purchased Apple stock back in February of 2006, prior to the iPhone when it was trading around $8 a share. We put $5,000 in, fast forward to 2020, and now that $5,000 has appreciated to $100,000. Each one of us on this call is subject to the potential capital gains of $95,000 if we sell it. And in this hypothetical, we're in the top tax bracket of 37%. Not knowing how taxes work, we might go to a local charity, and I do know that Impact Austin does accept publicly traded securities directly through the Community Foundation, so you can utilize this strategy with them if you wanted to give stock. But let's say, for example, you went to a different nonprofit, and they don't accept publicly traded securities, but they would take your cash. You go back home and you sell your stock. Well, by doing so, you're going to have to pay Uncle Sam capital gains tax, and in this case, it's $19,000. You still get the value of your charitable deduction less the capital gains tax paid at $10,970, and you get to give your charity $81,000, and you feel really, really good about that. But by opening up a donor-advised fund or giving your stock directly to the charity, now you don't have to pay Uncle Sam any capital gains tax. Instead, the value of your charitable deduction significantly increases to $37,000. So look at what you get to gain there. You get a higher deduction. But more importantly, you get to give your charity the full $100,000. Now the question sometimes becomes, should I open up a donor-advised fund account or should I give my stock directly to the charity? And the answer is very simple. If you are comfortable giving that full $100,000 this year to that charity, or it could be multiple charities, if you're comfortable giving that full $100,000 in 2020, then by all means, go direct and give to the charity. But if you're going to be utilizing this strategy to take this $100,000 and give it over time, maybe 2 years, 3 years, 5 years, 10 years, 20 years, that's where a donor-advised fund can be very advantageous, because the deduction is based on when you contribute and not distribute. So what we like to say at Schwab Charitable is that tax savings equals more money for charity. But what I like to say is that you're creating a culture of caring, because let's step back and look at this again. Not only do you win, not only does the charity win, they get to serve more people, and those people go home and touch the lives of other people. And this is a net that you're casting out far greater than yourself, and that's how you create a culture of caring. So how do we execute for total impact? Well, in this case, what we have is I'm suggesting that you open up a donor-advised fund account. And by doing so, ideally what you're going to do is you're going to deposit an appreciated asset. At Schwab Charitable, our requirement to open up a donor-advised fund account is $5,000, and that balance doesn't need to be maintained. You deposit that security in kind to your donor-advised fund account, and you get to avoid the capital gains tax associated with that appreciation. And if you itemize, you might be able to claim a charitable deduction. Once the money is into the donor advised fund account, now you get to invest it. And again, you could potentially invest it in some of these socially responsible funds. The money grows tax-free, and then what will happen is now you get to do the fun part, as Suzanne said. You get to give the money away based on who, when, and how much on your time schedule. So you get to actually create impact with that investment and then give that money away. The financial returns will go back into reinvestments for you to maybe potentially give later. But most importantly, you're creating, again, more money for you to give to charities by avoiding that capital gains tax. So final thoughts before we get finished. The time is now. According to the Walton Social Impact Initiative Project, SAGE, total capital with gender lens cleared $22 billion in 2018 and is increasing. So impact investing is not intersectional. It's not just the narrow lens of women and men, but from a broader lens of intersectionality. It needs to go beyond gender and look at inclusion as well. And then account for gender in all decision making. Overlaying impact at the corporate level ensures that both a company's product and its leadership team creates opportunities for women to thrive. And finally, data is nothing without action. Investing in women is not a risk, it's a normal opportunity. So my final thoughts to you all today are: find your purpose, begins with what matters to you most, your core values and social or environmental issues. Identify the change you would like to see in your community or in the world. Then let your purpose-associated goals inform and guide you how you deploy your assets. It could be what you consume, how you invest, or how you give your money away. And make your giving and volunteering and investing decisions to further the change that you seek. Start by asking your advisor, or if you don't have an advisor, maybe find an advisor, and ask, how might my investments help create the future I want to live in? Giving and investing for social change doesn't need to be overwhelming. In fact, our goal is to have you experience the joy of giving. But just like Suzanne said, it's never too late to start, and all you need to do is start the conversation. And finally, just be generous and timely with your giving, whether it's your time, your talent, your treasure, your testimony, or your ties. More than ever, nonprofits need us in 2020.